Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, October 27th. And wow, let's just get right into this one. Obviously, we had a huge gap open. There was basically agreement and follow through on the Europe bailout, which is obviously great for the equities market. We can see it's up nearly 4% on the day. If I believe, I didn't check the close for the DAX or the FTSE, but I saw they were up over 4 and 5% for the day. I don't know how they closed, but at one point in the morning when I looked at them, they were up huge. But basically, we're seeing more of the same, and we got our, we had our sideways consolidation that we were talking about. We caught this move. And then we had our little back test, and that's all she wrote. And to be honest, I was expecting basically more sideways movement. And hey, there's one way to beat sideways consolidation, and that's to gap up above it and not come back. And that's what the market's doing. Do I think the market's due for a rest? Yeah, probably, guys. This thing's up. We're almost back at 1,300. I remember, back at, wasn't it at the beginning of this month where we were almost to 1,050 on the S&P, and now we're almost at 1,300. This is institutional volume chasing the market higher. It's really not much more complicated than that. Basically, any dip we're seeing is being bought. We're seeing earnings that they're beating expectations. Some are, some aren't. But companies, some companies are raising guidance, and it's showing in their stock. And basically, sorry about that. Basically, it's showing us that the market is repricing the bad news, the news of economic development and growth. We had our GDP number come out this morning, and it was 2.5%. So that's pretty good. It's better than nothing, and it's showing that the U.S. is growing slowly, but it is growing. And maybe, well, really, it's all with bailouts and everything, but this is showing us, this price development is showing us maybe things aren't as bad as we thought, and it's okay to own stocks. It also helps when the Fed is your backstop in the market. But remember, down at these lows, if you were watching my videos, I was saying this is a buying opportunity. You got to get along for the ride, and sure enough, that's exactly what we're seeing. And now we're seeing people who weren't invested, money managers who have to be invested to keep their clients chasing the market at any price. We gapped up, 30 points on the S&P today and just kept going? That doesn't happen often. So, enjoy this ride, but trail your profits. Don't let the market, take them back, even though any dip should be bought. And, really we're looking for a deeper pullback eventually. Perhaps back down to the 125 area on the SPY. That's the chart I have on right now. But, take it how you can get it. If the market's telling you that, we're getting buying at 127 on the SPY, then that's what you have to go with, and that's where you have to put your stop right under it. So let's look into a few more stocks here, and we'll call it in for the night. All right, I think it's appropriate to cover Apple because we've been talking about that lately. We're basically, Apple, relative to the rest of the market, Apple had a poor day. It gapped up. It had a nice gap up, but it closed towards the lower end of the range, and that's telling me that, people are still, they're at least getting their, selling their exposure of Apple into strength. And sure, that might change. We may break out. I wouldn't be surprised if we do. But, given what's going on right now with Apple, we're seeing some resistance. We're seeing selling pressure. And if you want to buy these dips, that's fine. There's no reason not to, because they are profitable. And even if you want to sell the RIPs, and by sell I mean take profits or short, whatever your preference is, but do it at your own risk. But Apple's weak to the rest of the market, so if you're looking for market performance, you're better off holding the SPY than Apple. Another sector that I was covering was the XLF, and I was saying, guys, this could be a breakout to the upside. And sure enough, this led the market higher today. The bailout of Europe is telling you, hey, financials are okay to own. And you see this here. We had a huge volume day, and we're seeing follow through in a sector that's been a laggard. And now, it's leading to the upside. And whether that, well, I shouldn't say it's leading to the upside, but it's powering higher and it's performing. And we're seeing that, hey, it's not, these are not bad prices to own the financials. And whether that's short covering because they're like, hey, these are not bad prices to own financials, I shouldn't be shorting these, or it's actual buying for longer term positions from money managers. XLF is performing. If you've been watching my videos, I covered it. It was either over the weekend or last Thursday, and I think it was the XLF was in this general range. In this general range. I think it was this day. And I was saying, guys, this may work out. This could be a winner. And sure enough, it was. And, I can't really take the credit for it. Let's be honest. The market is just going straight up. So it's pretty much, hey, if you can find any stock, you're probably going to make money on it if you buy it. So it's not like some holy grail. Oh, how does he pick, what sector is going to outperform? It's a little bit of technical analysis and knowing volume profile, which is very important. But, it's just being on the right side of the market. And when you're on the right side of the market, you tend to make money, and you want to avoid being on the wrong side of the market. So, my job is to help and show you how to be on the right side of the market, how to manage your risk on the right side of the market so you can make a ton of money. So, that's really all I wanted to cover for tonight. I hope this helps. I hope you're making a buttload of money. And I should say boatload, not buttload. But anyway, sorry about that. This is Nick Inman from VolumeProfileTrader.com.